You are standing in the eye of the storm. The pressure is building, and if you look at the data, it starts to make sense, but only when we piece it together, and that's what we'll do here today. I'm going to talk about what's been happening recently in China, how that affects you. We're going to look at the S&P 500. I want to talk about real estate and basically how all of these things are connected and what you can do about it. That's right, all here in today's video. My name is David Quintero. What I do at this channel is I bring you all the most relevant information. I take away all that financial wizardry and simply make it easy for you to digest. So if you appreciate this video, hit that thumbs up and we will talk about, of course, our friends, the central bankers. Here we have it. Jackson Hole, post-inflation challenges vex the central bankers. Why is that the case? Well, they want to print a lot of money, they want to reduce interest rates, and they want to somehow not create inflation. It's as if they are completely oblivious to their actions, but of course, that's only the surface level. If we look at what they do, it is pretty clear and pretty obvious. They are intentionally trying to create inflation and will not allow deflation to occur. And so what's happening here is they're monitoring all this data and they're saying to themselves, at what point do we stop and reverse course? That's what the market is looking at, and that's what investors are looking for. I pay attention to all of the conference calls, all of the different, earnings calls, everything that comes through, and I'm looking at this information to get a sign of what's coming. And this is the only thing, the absolute only thing that markets are caring about right now here in this time of 2023. 2024 could be a very different world. I'm going to show you how the impact of what happens in China makes its way to the United States, to Canada, to the UK, and so on. Look at this. You'll see this. Jeremy Grantham says that the Fed is kidding itself on avoiding a recession. Fed almost guaranteed to be wrong. And why is that the case? He makes it pretty clear, and I actually do agree with this, that they've never been right. They've literally never been right about a recession. Now, they are there to protect, just like the president or prime minister would of a country. They're never going to say, oh, yes, we think a recession is coming. We think our economy is doing bad. They're always going to be the cheerleader, and for obvious reasons. This, though, it's important to note simply because the circumstances that we're dealing with right now are worse than what we have seen historically. I want to note a few things, and that is, number one, you got to understand people are feeling the pressure. I hear from people every single day. Every single day, they're telling me, I'm in this country, I'm in that state, I'm in this province, I'm in this city, and they're feeling the pressure. At the same time, companies are raising their prices. They're not giving up on that. They are going to increase until they are over the edge, and maybe they won't even bring them back down. Companies are increasing their prices. At the end of this video, I'm going to show you several examples of how this basically stretches in every single direction. And then we have China that currently has a problem, and now the economy around the world is impacted by this. I told you that you've got to watch what happens in China, and look what occurs today. I have been talking about this a while, and now here we are. I've got the information for you as well. When it relates to Jeremy Grantham, don't take his word for it. Don't take any of these people, and in fact mine as well. You don't take the word for it. You simply look at the information and then you verify it for yourself. That's all. That's all we got to do. If you look at in this particular instance, US stocks, you could see that September does not look to be a strong month historically. Does that mean I would trade based on that information? Does that mean I would sell everything and then come back in October? No, that's not what that means. It just shows us that historically we have certain data that could explain certain things. And when on top of that, you've got the debt, on top of that, you've got like AI stocks that have pulled the market up, keeping it alive like a marionette. This is something that we should be paying attention to. And of course, valuations are certainly stretched here today. These companies are being pushed up through all the easy monetary policy, but now we started to dry that up. Through other means, we have added liquidity through. This is something I talk about with the mentorship group. But also, if you look right here, money mirror method, and I'll tell you about that money mirror method if you haven't heard it before at the end of this video. I wanted to show you a few things about what's happening in the economy because this is all interconnected. If the companies are not doing well, they can't hire people. And if they are doing very well, they have to hire a lot of people. So this has a direct impact. And what about all the commercial real estate? Big news as well, right? Well, this is related to Canada, but isn't this crazy? Okay. So in Canada, a little different situation with how mortgages work than the United States. But the point is, you look at a variable interest mortgage rate above 7%, same like in the US, right? But for fixed. They were paying before, like in the case of HSBC, in some other cases, 0.99% before. 0.99%. Others were like, let's say 1.99%. So they were super low. Now they're 7%. Look at this. The situation has also brought the return of mortgages that are amortized for more than 35 years. There are examples of 40-year mortgage. At the start of last year, those didn't exist in RBC's Canadian mortgage book, and now such loans represent a 23% of their entire portfolio. Do you not see the flashing warning signs when 23% of your portfolio is based on these mortgages to be paid off over a 35-year period? And that, just to be clear, means that in the next time that they have to go, because in Canada works different, as I said, 3 to 5 years, they're going to have to renegotiate that mortgage, refinance that mortgage. It's not like in the US where you can pay that off over the 30. That doesn't work like that. So what happens in the next 2 years? What happens in the next year as they have to refinance? Are interest rates going to be higher? Maybe they had it at that 2%. Now they're coming due and mortgage rates are 7% now. I'm screwed. They've got serious problems and they can't be dealt with. If your mortgage rate doubled, what's going to happen to your payment? It's going to be unpayable for most people. And so this is where we are at today, right now. So that's mortgages, that's Canada, but it applies to so many other places. So what do you think? Where are the rich and young people moving to? What are they doing? Are they sitting still or are they taking it as it is and they're simply going off? I think you get the point here. Yes, in fact, a lot of them are moving. Florida and Texas gained the most young high earners, while New York and California lost the most. I really don't think that's a surprise to anybody. I get that, but I just wanted to make that clear that when you have prices that go too high, when you have inflation that starts to pick up everywhere, when people are feeling the burn, well, what do? They push themselves to the edge. What are companies doing? I'm going to show you some examples of that right now. You've heard of quiet quitting. Now companies are quiet cutting. Check this out. Layoffs are down, but employers are still finding ways to cut jobs. Isn't this interesting? Check it out. Workers are waking up to emails and team meeting requests with a jarring message. They aren't fired, but their jobs are gone. I don't want to laugh at this, but it's funny. You're not fired. You just remember you used to work here, like this was your seat. It's not anymore. You're not there anymore. So what's happening is basically they're saying, we don't need that position anymore, but we've got these positions. I've talked to people before that work working for the city basically, and they start to outsource the department. So they say you are a city worker, you're a government employee, you still get your employment, but you don't have a job. And so you can pick from these jobs. Okay, we got the nighttime shift, we've got the shift work, or we got the really dirty job that nobody wants. I don't want that. I want my old job. I was working there. Oh, I'm sorry. Job's gone. So that's what companies are doing right now. Knowing that people might say, I don't want to work as the janitor. I was working as the, in the C-suite. I was good. Oh no, janitor, forget it. I'm out. And so they can kind of push people out. They do like force them out in a sense. Okay. A lot of the big companies, what they do is they give them an ultimatum, just say that they know they're going to quit, or they just package them out anyway. It's kind of a, two sides. Look, we want to get rid of you, but here's the deal. Here's the package. just get on out. That's happening right now today. That shows us the sense of what's happening in the economy and the job situation. It is not as strong as they make it seem. What about this? China's worsening economic slowdown is rippling across the globe. Asian economies are taking the biggest hit to trade so far. Falling prices in China may help to curb global inflation. That would be a good sign if that was the case. But I'm about to tell you that isn't happening at this point. For some things anyway. China's economy was meant to drive a third of global economic growth this year, so its dramatic slowdown in recent months is sounding alarm bells across the world. Policymakers are bracing for a hit to their economies as China's imports of everything from construction materials to electronics slide. Caterpillar says Chinese demand for machines used on building sites is worse than previously thought. What do you think? What do you think? Obviously, they've got the whole problem. People think, oh, yeah, that's a good thing. Or, yeah, who cares about China? You're talking about companies that are from the US, companies that employ people in the US. They are directly or indirectly doing business with China. If they're hurting, you're hurting. Let me tell you, this is what's going on right now today. Do not shy away from this information. Global investors have already pulled more than $10 billion from China's stock markets, with most of the selling in blue chips. Goldman Sachs and Morgan Stanley have cut their targets for Chinese equities, with the former also warning of spillover risks to the region. In the short term, as you're seeing this video, actually stocks had gone up in China. But anyway, that's Goldman Sachs and Morgan Stanley. And why is that the case? I'll show you in a second. China's trade is critically important for the world. It's the top export destination for almost 40 economies. Just think about that. It's unbelievable. Unbelievable. Okay. So obviously, you know the drill. You got problems inside of China. Economy slowing down. They're not importing because they're not building as much as they did before. And that hurts all of these different countries to one degree or another. Depends how influenced they are by it. So pay attention closely. This is a global problem all at the same time, where they're just getting ready. They got their finger on the trigger of that printing press, ready to set your dollars on fire. That's what's going to happen. Looking at this basically just saying that right now at this time, they have done a lot of different stimulus measures inside of China. As a result of that, it's having some effect for the stimulative effect, and the stock market has risen as a result of that. That's all this says. Okay, I need to tell you about inflation. I'm going to move really fast through this. Stick with me, okay? I want to show you different companies. What about this? Adjusting our Spotify premium prices. I would love to adjust my bank account higher, wouldn't you? I would just love to adjust it, okay? But in this case here, what they've done is increase their prices. Spotify premium. Google is raising the prices of YouTube premium to $13.99 a month. Oil and food prices are rising, and so are wages. Inflation isn't beaten yet. So they can show us that inflation goes down, but let's be honest, it's not. All right. And then we have this. Companies push prices higher, protecting profits, but adding to inflation. Corporate profits have been bolstered by higher prices, even as some of the cost of doing business have fallen in recent months. Absolutely. There's no question about it. I could tell you, though, warehousing is more expensive. That's in both US and in China, warehousing. Employee costs have certainly gone up. Material costs have gone up as well. That's my experience. Okay. So those three things do have an impact on the bottom line of the price. But what's going on? It doesn't matter of the situation. They're just going to keep increasing prices. All different types of businesses are doing the same. Don't sit idle. Don't just let it happen. I'm going to tell you what you've got to do. Okay. Very important stuff. I've got it written down for you here. I wanted to make sure I hit all these points. Number one, dig yourself out of your mess. That's the number one thing. Don't worry about this and that and going on Twitter and going on Facebook and all these different things. Dig yourself out of your mess, whether that is something because the bad job that you're in is not paying enough, or you just hate it or whatever. Get yourself into a better situation there. Get that established. Get the payments coming in. Number two is debt. Get your debt paid off as best you can. There are different ways to do this. You could use a balance credit card to do that, transfer balance. You can, borrow money where you have to. Maybe a family member is willing to do that if they understand your plan. Write your plan down on a paper. Make sure that it's understood. Number two, okay? spend time building assets or preparedness. You're investing when you do that, okay? You build a garden in the backyard, that's preparedness, that's an investment. Not just because the seeds that you bought and you planted it in, and that's what I'm talking about. I am talking about actually investing into your future, being able to be prepared. You invest in insurance hoping to never use it. That's the way it works, right? Number 3, align yourself with the right people. How do you find the right people? Depends on your circumstances and what you're trying to do. All online. You could do it in person. I've got the Discord group that has 1,200 people in it. When you go onto the Discord group, as you can see right here, you're going to get all kinds of tips, including money mirror method. That is just one thing. Join that at the link in the description. Hit that link. It's totally free. Of course, there's tips, there's strategies, and you could reach out to me directly. And then I want to highlight the comment of the day. Thank you very much. As always, Nikki Cat. Everyone told me I was crazy for aggressively paying down my student loans during the moratorium because they were going to be forgiven. I knew if I didn't pay them off, I would never be able to. Every time I manage to get a new job that pays more, everything else goes up drastically and makes it hard to get ahead. I don't regret paying them off. And I love that. I want to thank you for your comment. Thank you for all your comments, of course. But this is the situation we are in. We need to do our best to pay down that debt. We got to accelerate our income as best as possible. I am working on some programs. In fact, I'm even thinking about, started to work on it already, the introductions of the children's books so that we can educate the children's right from the ground all the way up. So we're going to create these strategies and kind of sink that in, okay, into people's minds. Hopefully doing my best to do what I can. You got to do what you can. Align yourself with the right people. Join the Discord. I'll see you there.